There's probably two different instances when our clients would ask us for strategic review. The first is where they've got challenges within their business. There are threats to their current portfolio of products and services, and therefore they're asking us to assess where they should be investing research and development expenditure within their business, what the shape of their routes to market should look like. And in those instances, we will probably work alongside market consultants and operational consultants. The second instance is where an owner of a business generally approaches us and says, I think I'm going to want to sell my business in the next 2 or 3 years. How do I make this business the most attractive business it can be to the buyer pool? Now, it may well be that they're a 3rd or 4th generation family business and the next generation aren't coming in. It could be private equity owned, and therefore they know they've got a certain time when they've got to sell. So in that instance, which is where we'd focus more of our time, our work is on about how do we make that business as attractive as it can be. So first of all, we'll look at it from a timing perspective. So there's generally a group of buyers that we can identify. Are they going to be wanting to buy when we want to sell? It's a bit like a marriage. You've got to make sure that the two come together at the same time. Secondly, we're then looking at what does that buyer pool really want to buy and why. So at that point in time, it's assessing how our business can best fit within that buyer pool, looking at where they're investing their capital and making sure that we can be additive to each of those different buyers. It's then about how do we get all of our messages to fit together from a PR strategy, a website, a sales documentation, a profit and loss account, a balance sheet, etc. The output of our work would generally be a 60 to 100 page document that sets out for the client the actions we think they should be taking over the next 12, 24, 36 months to maximise value. And then we would probably attend quarterly board meetings to review on an evolving basis as to whether our original advice still stands. For instance, if we see that a couple of the potential buyers out there go and make acquisitions in our space or an adjoining space, then that says to you that you need to rethink about how you're going to come back to market.